Welcome back to Fast Market here on the TD Ameritrade Network. Let's bring in our next guest for our cash tag segment. That's going to be Andy Swan, co-founder at LikeFolio. Welcome back to the show, Andy.
Thank you.
All right, so we're talking Nike. A day ahead of earnings here. Stocks underperformed, down over 3% so far this year. It seems like they've got some headwinds, maybe on the wholesale unit sales for this company. We all know about the China issues. But when you look at the data here, direct-to-consumer seems pretty strong. What kind of data do you guys have out of LikeFolio?
Yeah, that's a really good setup. I think that summarizes what's going on with Nike. They've got inventory problems, they've got China problems, but what they don't have is problems reaching their consumers and their buyers directly. And so we've seen over the past, 6, 8, 10 months, we've been on this show several times talking about Foot Locker kind of getting cut out of the action, Nike going direct to consumer. And what we're seeing at LikeFolio is that strategy is working long term. There are near term headwinds and speed bumps to get over, but Nike is building out a really effective direct to consumer channel. I think it's 27% of sales, which is up triple since 2019 and growing. And we continue to see that grow. We see web visits directly to Nike.com up 13% year over year, near all-time highs. We expect that to move to all-time highs soon as the company, continues to build out this channel and promote it and cut out those third-party middlemen like Foot Locker. So, overall, I think Nike's got some problems in the near term. Those are clear. They may have even over sandbagged this report in their last, their last quarter was really kind of a blockbuster report until they came out and started talking about the future really cautiously. And so here we are in that future. We'll see what they have to say. I think that they'll continue to remain somewhat cautious in their outlook, but I think that Wall Street's expectations have come down far enough that it should be a pretty easy bar for Nike to get over, especially considering their direct-to-consumer success.
Andy, they had a net income problem, right, in the past, where the expenses were going higher, the bottlenecks were causing some problems, but the revenue numbers were still up 11%, and this company still generates free cash flow, and they're the gold standard when you think of apparel and shoes. Everyone's chasing them. Everyone makes a little bit of headway and then they drop off. We thought Under Armour at one point in their history was a real competitor. They turned out not to be so far. This is just a company that, you're right, isn't getting a lot of love, but their business model is resilient. They keep making free cash flow, and they keep innovating. They've got 2 new shoes, Invincible 3, Pegasus Trail 4. They keep innovating. This is a company that's, I don't know why they're so underloved, but they are, Andy.
Yeah, they are. I think, it's really their exposure to, some of the macro environment stuff that is holding them back. I think from a brand perspective, they're very resilient as well. We saw significant backlash to, the spokesperson that Bud Light used being involved in one of their sports bra ads. And there's significant backlash to that and significant negative response to that. But unlike Bud Light, this is not going to be in any way a permanent ding against this brand. This brand is extraordinarily resilient. They've been through controversy before. They know how to handle it, and it just helps that they have a multi-decade, reputation for being cool and being innovative. That allows you to get away with a lot of experimental things that other companies can't. And so we see, Nike sentiment down a little bit, but overall it's probably a flash in the pan, unlike some other companies. And so, from a long-term perspective, I love this company. I think it's like Apple for apparel. It's just the one you can't bet against. Short-term, we'll have to see. We're neutral going into this earnings event. If anything, my bias would be to the upside, because I do think they may have sandbagged this quarter a little bit in the last earnings call.
Yeah, and you mentioned those happiness counts on that chart that you have there, Andy. They've come down a little bit. I mean, they're still elevated. I mean, this is every year, this is a top 10 as far as brand name recognition across the globe, not just here. We all know about the issues that they're having and the slow pickup in sales across the board and everything in China. But when you look at this company moving forward, do you have to look at it long term? Because if they have another quarter with inventories up another, what were they, 17% versus a year prior, that was one of the reasons they fell. Foot Locker fell in mid-May, which hurt the stock also, so their sales are drying up a little bit. Even though they're going to direct to the consumer, is this more of a long-term story for you guys at LikeFolio?
Yeah, absolutely. In fact, I think of these headwinds, these current speed bumps that the company is going through as a real opportunity for long-term investors, because like I said, this is the Apple of apparel. This is the Tesla of apparel. This is a company that just executes extremely well and has a long-term vision. And I think their direct-to-consumer vision, now representing 27% of sales, I don't see why 5-10 years from now that can't be 70% of sales and really be a massive boost to profit margins over time. And this is the type of company that can execute on that decade-long vision.
Yeah, and I think you throw in the fact that the consumer isn't as weak as a lot of people expected over the last several months, and the last couple of quarters might be a benefit to them also. All right, great stuff, great data as always, Andy. Appreciate it.
Thank you.
All right, that's Andy Swan, co-founder at LikeFolio.